Hello guys, welcome back to this video. This is one of the last trade breakdown that I'm going to do for this week. This is a trade that we shared in our Telegram group. I'm going to show you, so stick to the end and watch the trade breakdown. It's so simple and easy to follow. What you need to know are here. If you want to trade this strategy, it is an SMC strategy, and therefore you must know practicalities of market. You must know order flow, you must know market structure, inducement, basic supply and demand, scope, and then valid pullbacks. I simplified this trading strategy into the following for entry purposes. Now this is a trade that we really monitored. What you can see, the market broke structure here, changed character somewhere here, internal change of character, and then we have now overall change of character here. So the market has really been pushing from from this high to this high. So basically we were expecting the market to push a little half. As you can see, it pushed half, so that was valid pullback. And now when it pushed, it pushed from this was the low that broke this structure, and then eventually when it was taken with this week, that was a change of character. This sustained to confirm that indeed this was a break of structure, and therefore this was just continuation to take this low here. So these are the checklist. So what happened here is that the market goes down and then came back up. That was, to me, was a pullback. And why? Because this was 50% pullback, and that was okay. So this was not a break of structure here, because this was not a 50% pullback. All pullbacks should be 50%, by the way. So this pullback here did not come to 50%. As you can see, it was not 50% in this fib level. This red line here is 50%. That is not a valid pullback that would necessitate this to be a change of character. So that is why I marked this one as a a liquidity sweep. If you go to 4 hours, you will see the pullback clearly. But for a daily, if you want to not pull back on a daily, just see the high of this candle and the low of this candle. This IFC candle is a pullback in 4 hours and other time frame, like 1 day, like 15 minutes, 1 hour, 30 minutes. This is a pullback. That is why it broke this structure downward. So I was looking to on this day. This was on a Friday, it was selling, and then on Monday it closed bullish. So to me, this was just another pullback, just like this IFC candle you are seeing here. So the next day I was very eagerly looking for buys to take this sells to take this low here, using the set criteria that I have marked here. So I don't like to complicate it. I just mark the high and the low of the candle that we should be breaking. That is external range marked in 1 day. If you check, that is how I trade. Almost all my trades are like that. So after marking that, as you can see, this was a very good pullback. As you can see, it was taken and then a change of character, and then it now started selling down. So if you know how to mark pullbacks even on a daily time frame, you will be very fine in terms of SMC knowledge. Now this is the low I'm expecting to be taken at the end of the day, and then we are expecting that this overall equal low is going to be taken here. So let me just mark, this is my daily high and low. So this here becomes my daily, this becomes my daily high, protected daily high. I don't want it to be taken, but if it is taken, it is liquidity. I'm not going to change my bias. So every day I come to the market, I have a bias that is already fixed. I am not changing, and I'm not looking for anything else, even if the market is so juicy in the opposite direction. So I've already marked my day high and low. I now mark internal range. Now internally, what is the price doing? Price is doing this. Market came back, pushed down, and then now it started to pulling backward, as you can see. So it has started pulling backward, and then now it is in the process of beginning to sell. So by this time, I can't mark it fully because I've not seen what the daily is, what the 4 hours are going to do overnight. So this is that is the candle that, sorry, the candles, yeah, this is the candle of the following day, the day I want to trade. Then it comes, takes the high of this, so this becomes 4 a.m. so I'm waiting to see if the low of this will be taken. When my session opens, I want to see the low of this being taken, and then now my price movement is very simple. This price moves like this, move internal, and now it is trying to pull back. So how will I know it is pulling back? Only if this low is taken, and this low will be taken, and this low and this low. So maybe it can pull back here and then keep going to take this high. So I'll just be patiently waiting to see what happened. I'm not in a hurry with it, since the following day it was bullish. So this becomes my internal 4 hours. This is what now I'm looking at. I'm only willing to trade sells when I see what is moving on in between my 4 hours range. So the next candle is going to open at my London time. So I've already marked my 4 hours high. 4 hours high is here, and then I need to mark my 4 hours low. This one is what I'm expecting to be taken. If it is taken, it is very high probability that we are going to sell. So this becomes my low, and then this becomes my high. If this is taken, the market will still be buying, but I am hoping that it doesn't take the daily high, which will lower probability of this trade. So after this, I now start go and wait for the market in 15 minutes and 1 hour. So let's go to 1 hour and see. So I'm expecting this to be taken here. So let's see what happens. And immediately it goes up. This is 9 a.m. not yet my window. So as you can see, the low of this candle has been taken, so I'm expecting this high to hold. If it doesn't hold, then I'll be willing to watch more than buy. Then let's see what happens, because we've only had our first break. I would really be even eager to see if we get a second break. Since yesterday was a buy, I'm not that fast into entries. Then what happens? Immediately my session opens and takes the high of that. That means now this is the high that I need to see being taken out. Alternatively, you can still be aggressive and get entries above here. Just note that the 4 hours candle here, this 4 hours candle here that sold, both highs and lows have been taken out. Both highs and lows have been taken out. Highs has been taken, low has been taken. So it will be ideal if you see it break this. That is a must for me. So I have to market takes 4 hours fractal low slash high aligned to 1 day direction. So I just go back to 1 hour. This trade, I really waited for it for a long time. It really demands a lot of patience to see how it is playing. I'm too much now. Like I said, you could also take it from above here, but just know that you shall have disobeyed a very simple rule here of enter in second break in 15 minutes, because we don't have second break. This was IDM being taken here and a break of structure up. So to change character, this structure of liquidity must hold this demand zone so that we get another break of structure. So if this base that caused this rally does not hold, then this turns to a demand supply. This is the demand zone, turns supply. Simple. That is a simple explanation. So immediately it opens. Now we can still see this is the first break. Now we get our second break, which is nice. So you can take it from that point, but at this point I think I was observing other pairs, because this would also mean that I am willing to be liquidated here. If this was to be IDM, this was to be my IDM, I was willing to be liquidated here. So the always best option is to take it from, is to take direct entry when this sell is second, when this break happens. You can always take your entry inside here. So I was not checking it actively, so it held. Let me see, it held like that. So if that is the case, then we can see what did price do. It pushed down, pushed up, pushed down, took the high of this. So it means that even if this one will be liquidated, this is now high probability area to take the sell. And then at the same time, New York has just opened, so you can take your sells somewhere here. And then what am I expecting? I'm expecting this to be taken here. So you can hold to that, or you can hold to this day. So you are willing to be liquidated here, but the sales are still now very valid. You can wait, even take it here, take it here. This is now decisional. So what happens? It does not come, so we have to wait for pullback. When it comes back to pullback, we are going to now go to monitor it on 15 minutes, on 5 minutes, sorry, and see if we get the entry. Let's wait for, now we've gotten second break, monitor order flow in 15 minutes. We've done that. So let me just break down what happened in 15 minutes. In 15 minutes, what just happened? What happened is simple. This break is a liquidity for me because it did not sustain. This one did not sustain, so this to me is a liquidity. Why is it a liquidity and not a breakout structure? Because it was supposed to continue and not cause this violation. Immediately this violation happened of this supply zone, this here, this violation happened on this week. It needed to go back very fast and cause another breakout structure so that this can be strong again. But what happened is sustained, so this becomes our first breakout structure down, and then this becomes our second breakout structure, this becomes our second breakout structure down. So the trade is now valid. The market is breaking structure on the downward side, so this would be nice liquidity point. Or if it doesn't take this one, we can wait and then accept to be liquidated here, or take trades up here when it pulls back, like what it did the second day. It pulled back, it cost us, it took our liquidity, it took us as liquidity and then pushed up here. So what happens again? We go to 15 minutes. This is now third break. If this is third break, it's even high probability the market is now fully back into bearish side. 4 hours has already aligned with 15 minutes, and 4 hours had already also aligned with the 1 day time frame. So the next thing is just to look for such supply zones. These are supply zone to look for trade. The next thing we would be looking for is supply zone, and then we look for scope. So when it is pulling back, when it is pulling back, you wait in 5 minutes. It's always recommended. 15 minutes is the best, but 5 minutes is good precision. So immediately that candle closed down like that. That was a good entry point. You can place your stop loss here, but you risk being liquidated, so you can even place it somewhere here. It's okay. So we wait for that momentum, is what we are waiting for. So you can see it pulls back, and immediately it pulls back. What happened? You see it pulled back, then immediately it started tanking down. it started tanking, and then it finished up on in another over in how do you call it, in Asian session. That is when the market completed this cycle of a 5-hour trade that we were waiting for the whole day to take place. So immediately Asia opened, it just dumped into take profit. I think so, just dumped into take profit. So, and that was a take profit hit. I like I said, this was the overall target. You could have targeted 1 to 8 there. So the right stop loss was somewhere here, realistic stop loss 17 pips, which is okay. So I want to bring you to attention that this is a trade that we really looked into taking. This is it. USD JPY eventually hit TP, though I didn't take it. Got tired and left without taking it. It was very late at my time now, and I had really stared into the chart the whole day, and I'd even gotten my first stop loss. So as usual, we are human beings, we get discouraged, but I clearly said here that Euro JPY and USD JPY sells. If you still want to trade, I am looking for my trade of the day. So this was at 2 p.m. my time. I was almost getting tired. So let me see if I showed it again. I think I showed it. No, it was shown in our charts. In one of our charts, one of the members showed that it is ready. I'm not sure which one, but I was not around the chart to confirm it. I was not around the chart to confirm it that that it is ready. These are trades we take. I share my daily analysis here. You can join, it is free. I'm just documenting my life. At some point I'll be referring to them and see where it all started. So this was eventually the trade. As you can see, this is what we were waiting for. Eventually it came back, pulled back, upper stop loss, so it eventually played out well. Same to Euro JPY, that is a trade you are looking at also. It eventually played very well as expected. Here you also sold massively and smashed TP. So again, the following day I said Euro JPY and USD JPY should be selling. That's the buyers. The problem is that they are really oversold, so you could give them time to breathe and at least pull back. So you can join this group and be taking my daily biases to align with your analysis, so that you can be getting trades such as this one.